Good evening, everyone, and happy belated birthday to Singapore. I hope every one of you have a wonderful holiday. My name is Ken, Urex sales lead based in Singapore. Thanks again for attending the third and the last webinar by Philip Future and Urex to discuss about Urex micro futures. To cater for global participants, we successfully launched micro future contract for EURO STOXX 50.
Hi Ken, sorry, I think you need to share your screen because we can't see your screen yet. Yep, okay.
Okay, sorry about it. To cater for global participants, we successfully launched micro future contract for EURO STOXX 50, DAX, and SMI in April this year. Last month was an exciting month for European market due to the fear over COVID-19. Central bank reassured for the continued monetary support and strong corporate earnings announcements have resulted in the index ending higher month on month. Over 187,000 lot of micro DAX, 23,000 lot of micro EURO STOXX 50, and 770 of micro SMI were traded over last month. So in total, we have 211,000 lot, achieving the highest trading month in July 2021. So due to the fact that increasing of trading activity showed that the micro product have provided investor with more opportunity to participate in the exciting European equity market. As for last Friday, 6th of August, trading of micro product have exceeded 400,000 lot since we launched it. It's a good start, but there's a lot of work to do. We'll continue to work with Philip Future and hope more participants like you guys will be joining this pool. Order book liquidity of the micro product has also improved with the increased activity. The best bid offer that across all product and hour has developed healthily to allow trading of the product on the order book at any time during Urex trading hours. The thick spread of micro EURO STOXX 50 micro DAX future tightened in the straight months. As you can see, the spread is getting better in all time zones and on the monthly basis. Based on the last status, the spread tightens to the 1 tick for the micro DAX during European hour for the September contract. Last but not least, why do we want to trade Urex micro futures? Reason being, the micro contract are 5 times smaller than mini contract and they're 10 times smaller than a regular contract. Micro future product provide the exact hedging tool for global investor. Small contract size and low margin requirements. And also, one benefit is a free market data for the new private investor from May until further notice. Philip Future is offering the contract at a promotion rate at Euro 150. Thanks again. Thanks for your time. I hope you will enjoy the presentation by Daniel. And over to you, Minghui. Thank you.
All right, thank you, Ken. Moving on to our main speaker for the night, we have professional trader Mr. Daniel Ang, who will be sharing with us trading strategies as well as his outlook for the European indices, EURO STOXX 50 and the DAX. Before I pass this on to Daniel, please be informed that if you have any questions throughout the course of the webinar, please feel free to drop them into the questions box as we will have a live Q&A session towards the end. And now without further ado, let's have Daniel speak to us.
Hello, good evening. Again, like what Ken said, happy belated birthday to Singapore. This is our 56th National Day. This year is a bit weird because we don't have the usual celebration. However, we're going to have that on the 21st. In a few weeks' time, we will also be celebrating Malaysia National Day at the end of the month. So look forward to that as well. So today we will start the third of a series of webinars together with Philip Futures and Urex, and this will be the last of the series. And we'll be talking more about the contract specs and why you want to be watching and trading these particular products called the micro equity index futures from Urex, pertaining to the DAX 30 as well as the EURO STOXX 50. Now, as usual, when we start this, we will have to make it very clear that this presentation is definitely not an offer for you to buy or sell any securities, and trading of any kind of leverage product like futures and options are definitely speculative in nature. And before you attempt to even enter this trading, you must also be aware of your own risk profile as well as your own suitability. Obviously, later on, I'll be sharing with you some of my opinions about both these two micro equity products and the outlook, and they will be all my opinion. It got nothing to do with the Philip Futures as well as Urex, and you will have to take it with a pinch of salt, and you will have to agree to indemnify both me and my company, Traders Academy International, from all liabilities as a result of this presentation. Unfortunately, today I'm not able to turn on my webcam, so you can't see me. So you will have to make do with my voice. I don't have a great voice though. I wish I have a DJ voice, but I don't have. So again, there's going to be a bit of an overlap from what Ken has already mentioned earlier on. Why Urex? Now, Urex is important because it is the largest European futures and option exchange with an annual trading volume of over 1.6 billion contract traded. So this is a huge exchange, and they offer a wide variety of products, including interest rates, financial futures. So there's a wide range of products. Moreover, the other thing that we want to be concerned with is, of course, Euro area. Now, Euro area consists of 19 countries within the Eurozone, and they are collectively the second largest economy in the world. So whatever happens there obviously will have an impact. And besides looking at the US equity and US derivatives, Europe is going to be equally important. One of their most successful products has always been the Bund futures, which is the interest rates, and it is at the end of 2016 the 5th largest interest rate derivative contract. Likewise, the EURO STOXX 50 futures and options were the 4th and 7th most actively traded equity index derivative by volume. So this is the reason why you want to be also looking towards the Urex for a variety of products. Moreover, their trading hours is actually more in line with us. We all know that the US being the largest market right now. However, we are 12 hours ahead of them. The Eurozone itself, in which Urex is based in Frankfurt, the time zone is actually more agreeable, okay, for people based in this part of the world. Now, one of the reasons why Urex has introduced the micro equity index in April this year, and it was very timely because you can see this particular chart here. This is the DAX 30. Over the last few decades, from all the way to 1990, you can see that the market has been progressively been trading higher. And because the notional value has already come to the point, last I checked was at 15,762. Now, if you use this valuation of the DAX 30, you will notice that the regular contract, which is the DAX 50, the DAX futures with a value of 25 euro right now will be costing anywhere just under 400,000 euro. So this will be definitely out of reach for the typical investor like you and me. Okay. Obviously, they also have a mini DAX futures, which is based on 5 euro. Even that, the notional value is at 79,000. So again, it's again quite expensive, and it is not necessarily within the reach of the typical investor like you and me. So the micro DAX futures as well as the micro EURO STOXX futures contract is actually geared towards people like you and me, and to make it affordable so that they can lower down the barrier to entry. And of course, the point value right now is only 1 euro. So it's very easy to know what is the value of the index itself. Whatever the index is, times by €1, it is the notional value. Currently, it's 15,762 euros. So you know that this is the entire contract size. And of course, we don't have to fork out this entire full amount of derivative products like futures, all traded on margin. And the margin has been just below 10%. And you can see that it's becoming within our ability to trade. So this is one of the key reasons why we should be looking at the Urex Micro Equity Index futures. Now, the DAX 30 is one of the premier stock index futures anywhere in the world. Okay, obviously this is a German index, and Germany being the largest economy within the Eurozone, obviously will have a lot of weightage. And we also want to see how we can take advantage of all the price movement in the Eurozone pertaining to Germany for the DAX 30. Similarly, for the EURO STOXX 50, you can see that although the market has not attained its previous high back in 2006, 2007, we can see that at the current price of 4,181, the regular EURO STOXX 50 futures with a point value of 10 euro, currently the notional value is just under 42,000 euro. So again, it is not necessarily within our reach. It's definitely geared towards fund managers. So for you and me, Urex actually come up with this micro EURO STOXX 50, which is based on €1 per tick. And you can see that the notional value is 4,181. So between the two, between the DAX 30 and the EURO STOXX 50, obviously the EURO STOXX 50 is the one that is more affordable for the typical investors. So that's the one of the reasons why we have the micro equity index. And it's, like I say, it's very, very timely. We know that the market has been climbing to all-time high, especially for the DAX 30. So we all want to be able to participate in it. Now, the other reason why the micro equity index futures by Urex has been very popular, one, of course, is that it is very investor friendly, because the tick value is definitely geared towards you and me, right? Like what Ken said, the contract size for the mini is 5 times smaller, and then it's 10 times smaller from the regular contract. So this particular micro equity index for both the Euro stocks as well as the DAX is definitely within the arena in which we can participate. And one of the reasons is it is very cost effective. Earlier on, Candy mentioned that the volume has picked up tremendously, especially for July, and the spread between the bid and offer price has actually narrowed down to the minimum 1 tick. So this is very good, because when we trade, we want to be able to save on the cost. Anything that we pay beyond commission, obviously, is the spread, and the spread need to be as tight as possible. If the spread right now is only 1 tick, then obviously this is the most advantageous right now. Okay, it's almost impossible to get no spread, right? So the minimum 1 tick is the minimum spread, and right now we are already there. Less than what? Today we are only in August, middle of August. So less than 4 months after they launched this product, the liquidity has become so much and the spread has tightened so well. They mean to say that there's a lot of people participating. The one reason why the spread can narrow is because there are very competitive price discovery mechanism here at work. Okay, there's a lot of pure buying and selling, and it allows the spread to actually narrow. Right now it is at a bare minimum. Okay, so of course the liquidity is good. Later on, I'll be showing some numbers to show you how liquid both products are. Okay, and because they are geared towards people like you and me, it's very ideal for doing one thing what we call scaling. Now, imagine if you are trading the mini contract, okay, and the notional value is obviously much more than the micro contract. Then it doesn't give you that ability to scale in. It means to say if you buy or sell at one level, that means you are stuck. You cannot like break down your levels into different levels of entry or exit. Now, with a micro equity index futures, it does allow you to scale in. For those people who have been doing equities, they will understand this thing called dollar averaging. So this is something very similar. Because the contract is small, okay, I think we have moved towards the point where everything becomes very fractional. Okay, in the OTC market, we can really see that most of the products now are very fractional, meaning to say you don't have to do one regular lot size. You can actually break down into various decimal points. So the micro equity index is also along this trend, in which the total amount, okay, can be break down into smaller lot size, in which you can do all kind of strategy, and one of which is the what we call scaling. And obviously macro index together with the other regular equity index futures allows you to do hedging. Now, for example, let's say you have a portfolio, assuming your portfolio size is 100,000 euro. Okay, so you can either use any of the equity index futures to actually hedge against your existing portfolio if you do not want to sell off anything within your portfolio. For example, let's say if the market have a temporary correction, you know that your entry price for your for most of your stocks are actually quite good. If you exit now, you probably cannot enter back at a good price. So instead of selling your stocks, you can actually sell forward, okay, the equity index futures, and the micro equity index futures does give you the ability to do that as well. Okay, you can already do that with the regular contract size as well as the mini. But however, the micro itself gives you a lot more flexibility, and the cost is so cheap right now. Earlier on, you heard that Philip Futures has a promotion going on. For the commission is only €1.5. So it is very, very affordable. Okay, so in terms of cost effectiveness, this is definitely a product that we all should be looking at. Now, the other thing is the long trading hours. All in, okay, the total amount of hours in which the Urex is open for trading is almost 21 hours. This is as good as 24 hours that as it can come. Okay, and then right now, because it's summer right now, the time zone is called the Central European Summer Time. Now this have two different things. Right now it is summer, it's called summertime. Come October, then you will revert back to the CET. CET means called the Central European Time. Okay, then you can see there's going to be a shift in timing. So for the Urex itself, there is no lunch break, and because there's no lunch break, it allows trading to go continuously. However, the volume itself will be affected. Typically during the lunch break, the liquidity is not as good. So you must be aware of the various time in which the market is less liquid. Then you do not want to go into a position and then have to suffer the illiquidity on a comparative basis. And also to note is that most of the earning reports and most of the major economic news are typically announced after the regular trading hours. So that will become an issue. So one of the reasons we see that this micro product has been very popular is that from the open interest, we can already see that most of the volume are all intraday. The majority of the volume traded per day are not carried forward to the next trading day. So they are all practically intraday trades. Okay, so that's one of the reasons why it is so liquid. And you can see that this table here, CEST, which is the Central European Summer Time, against Singapore and Malaysian time. Obviously, Singapore and Malaysia, we do not have any time difference. You can see that most of the trading hours are within our active hours. From 6 a.m. their time, which is our midday, okay, at lunchtime, the market stays open until 6 p.m. their time, which is for us midnight. So for the 12 hours in between, actually we are able to also watch this market without having to forego our sleep time. Unlike the fact that if you are trading the New York trading hours, you can find that most of the other half of the trading hours are actually past midnight, which is not very ideal for people from this part of the world. So the European trading hours is actually quite ideal. Okay. Now the volume has been growing by leaps and bounds. This product has only been around since April 19. You can see that for the last 4 months up to the end of July, it's already registering records. Okay, you can see that there's a chart here with two color bar. One we have a blue line, and then we have this orange. Now, of course, the blue one refers to the DAX. The orange refers to the EURO STOXX 50. You can see that the volume traded is already very, very healthy, considering that this is only launched in the middle of April. Right now, we are not even in the middle of August. Now, if you look at the very last bar, this is all accumulative. At as of yesterday, you can see that the volume has again picked up already. Okay, Candy mentioned that the volume is already at 400,000. These two products combined already looking at the total traded contracts at 400,000. So you can see that the volume traded is actually very, very good and very, very healthy. Okay, the increased liquidity, of course, is due to a lot of factors. Key among them will be the Delta variant resurgence, and that caused a little bit of anxiety in the marketplace because, of course, we have been reading news reports that the major economies are reopening, and this is summertime, and there's a lot of hope that this reopening is going to bring about higher economic activity. So if the Delta variant is going to be the factor that will cause a rethinking about the continued reopening, then that will be a negative. So this one caused a lot of anxiety, and that also leads to a lot of trading volume. And we also know that for the last few economic release, the numbers has been fantastic, whether it is the GDP, and of course the downside will be the inflation outlook. The inflation has actually gone from bad to worse. However, they also believe that that this inflation that we are seeing right now in the Eurozone is also temporary. So all these are coming to mix here. Okay. Earlier on, we did mention that the role of equity index futures essentially was for hedging. Now, hedging is a very simple concept. If you have holdings of any equities inside your portfolio and you are not ready to liquidate them, okay, then of course you can hedge against your entire portfolio by using futures contracts. Okay, essentially, depending on what you're holding, it will not be an exact 100% hedge because the composition of this futures contract itself will not be able to give you the 100% hedge, but it will be something very, very close. Okay, so depending on the value of the notional value and how many lots you need to cover your portfolio, you may not want to have 100% coverage. Maybe you only want to have to hedge 50% of your portfolio. So those are the things that you can use the futures equity index for. Okay, it allows you to have keep both your portfolios as well as to buy an insurance against price declines. Okay, the other one, of course, is based on the multiplier itself. The multiplier will be the one that will be what we'll be thinking about. The micro DAX study has a multiplier of 1. That means to say whatever the value of the index is equal to the times by the multiplier, which is €1, will give you the exact value. Okay, so you can actually use both the micro DAX as well as the EURO STOXX to hedge against your entire portfolio. Okay, again, it's up to you whether you want to have a complete coverage or whether you want to have partial coverage. For example, let's say you have a €100,000 portfolio, and let's say based on the current price, you probably have to sell 6 micro futures to cover to give you a coverage of €93,000. It's not perfect because you still have a €7,000 which is not completely hedged. So, but that gives you the flexibility to actually use some of these products here to mitigate the downside risk. Of course, you have to understand that all futures contracts do have an expiration date. For example, let's say you want a coverage beyond the expiration date of the current active months. Then when the contract is due to expire, you either have to roll over or you have to buy back, okay, buy back whatever you have sold in the equity index futures. Okay, so that is one thing you have to be aware of. The good thing is, even up to expiration, the difference will be settled in cash, so there is no worry about delivery. Okay, so you have both the EURO STOXX as well as the DAX study has a quarterly expiration, like March, June, September, and December. Right now, the active month is September. So once September ends, the next active month they will take over the front month will be the December contract. So you have to be aware of that rollover. Okay, during rollover, of course, the volume itself will spike up because of the activity, people exiting from the September contract to go into the December contract. Now, one of the other things that you can do other than hedging, I think this is where the bulk of the volume comes from, okay, is outright speculation. If you have a view on the general market, you can actually use a stock index, Okay, whether it is the regular contract or whether it's a mini, in this case we were talking about a micro index, then you can actually take a view. Okay, if you believe that the current valuation is too high and you, for whatever reason, after you do your analysis, you think that the market is likely to come down, you can actually take a short position. Now, for you to sell short in the stock itself, that will be difficult because most of the stock exchange do not allow or have very restrictive measures in place that prevent you from going short. Okay, but however, you can actually do that in the index futures. So one of the reasons why I have been trading index futures for so many years is because it gives me the ability to make money on the upside and make money on the downside. And we all know that if the market wants to correct, it can correct very fast. I always love to trade bear market because if the market comes off, it will come down really fast in the shortest possible time, and the velocity of the fall is always much greater than on the way up, because on the way up, obviously you need more kinetic energy. Okay, so you need more resources to push prices up. However, if the price wants to come down, it will come down very fast. And right now we are in that situation. Right now we are already in the first week of August. From August going into October is always a twilight zone. For some reason, October has always been a danger period for equities investors, because if you look back in history, most of the major correction in equity markets for some reason happens in October. So going into the next 2 months will be very interesting. If you have an opinion, you can also use these micro futures, either the DAX or the Euro Stocks, to actually take up a contrarian view. Right now we can see that the Euro Stoxx is a lot firmer compared to the DAX. Okay, it was the exact opposite a few months ago. However, now we can see that the stock 50, Euro Stoxx 50 is actually a lot firmer compared to the DAX 30. Okay, so later on I'll be showing you some charts and then we can take some reference from there. Now, one of the things that you also have to be aware of is the liquidity. Okay, earlier on we know that the volume has been going by leaps and bounds, but there are certain time of the day where the volumes, they are not even throughout the entire trading day. Certain hours you have higher liquidity compared to the rest. For example, their most active trading hours, you can see the chart here with that yellow box. Okay, it's highlighted in that red line. You can see that those peak spike in volume are the areas, timing in which the liquidity is at its highest. And if you compare those times, you can see this table on the right here. 8 a.m. is where the volume start to pick up. Okay, and that corresponds to our 2 p.m. Singapore time. And that is no coincidence. Most of the European markets, especially Frankfurt, will open at 2 p.m. Singapore time. Okay, and that ties in for the fact that when the market opens, the activity picks up. So that's logical. So for the next 3 hours between 8 a.m. to 10 a.m. their time, which correspond to 2 to 4 p.m. Singapore time, that trading, the volume is actually very ideal for intraday trading. However, in between, you can see that there are gaps in between whereby the volume actually taper off. And if they move into lunchtime, for example, the volume actually, will actually be decreased. And that corresponds to our time at 5 p.m. to 7 p.m. Then it picked up again. You can see that the next period in which the liquidity actually surged is 8 p.m. Singapore time. And that coincides with New York opening. And that stays that way until all the way to close to midnight. Sometimes it's 11 o'clock, sometimes it's midnight. It all depends. Okay, so between the next few hours from 8 p.m. to 11 p.m., that is again the best trading time zone. When Europe is open and New York is open, it is where the liquidity is at its peak. So let's say, for example, you have a lifestyle that doesn't allow you to trade 2 p.m. to 4 p.m. Singapore time. Then the next best golden hours is actually 8 p.m. to 11 p.m. Most of us will already be home, assuming we are all going back to office to work again. By the time you get back from office, you reach home, you can have a shower, you can have your dinner, you wait for 8 p.m., you turn on the computer, the market is at its peak. So that will be a fantastic trading hours for people who are either having a regular job or people who are running a business. So by that time of the day, we are already winding down. So it allows us to actually watch this market for another 3 to 4 hours. And that is the golden hours. Okay. It's one of the reasons why this product will actually work for people in our time zone. And this time zone stretch from Beijing all the way to Singapore. Now, there are a few key things that was announced quite recently. Of course, we want to know about the GDP growth. And you can see that this chart here has a fantastic, you can see the very last bar with the green color bar. This is the German GDP annual growth rate. Now, remember, this is only the flash estimate. It is not final yet, but it is already very good. You can see that for the last 5 quarters, it has been underwater, right? And now you can see that the second quarter, which ends in June this year, you can see the German GDP has actually recovered relatively well, okay, compared to where it was 5 quarters ago. So you can see that this is the momentum behind why the DAX is so elevated, okay. And I think it's also the same thing when later on when I show you the EURO STOXX numbers. You also see that both the German GDP annual growth rate is actually now positive, and it's not just positive, it's very positive. So that is the catalyst that caused the index actually to be trading higher. Okay, so this, you will probably have to look at the economic calendar more towards the European side, because when you trade, obviously you want to know when they're going to release what. Okay, now of course most of the key numbers will be released right after their regular trading hours, and that will have an impact. Now the euro area again refers to the 19 countries that forms this euro area. Namely, we have Germany being the engine of growth, the largest economy within the euro area, and they alone accounts for a big chunk of the share of GDP in the euro area. But the fact that they are the dominant economy within the Eurozone, you can also see that the share of the euro area GDP in Germany occupy about almost 30%. Okay, next will be France at 20%, then followed by Italy at 15%, and then Spain at 10%, and then the rest. You can see that these are the 4 dominant economy within the euro area. So the economy, individual GDP, you also have to monitor. But collectively, you can see that the second chart on the right there, you can see that the GDP growth rate has been collectively doing fantastically well. Okay, so well is that by comparison, Germany doesn't look that good anymore. Okay, Germany GDP growth has been quite good at 9.2%, but compared to, let's say, France, Italy, and Spain, then the Germany GDP seems a little bit pale by comparison. Okay, for the period compared to the same quarter last year. Okay, so we can see quarter to quarter, we can see that year to year, you can see that the entire euro area GDP has been fantastic, and that's also the reason why the Euro STOXX 50 has been doing comparatively better than the DAX 30. Now on the inflation front, both collectively in the euro area as well as in Germany, you can see that inflation is actually becoming an issue. These numbers that you see, the chart that you can see, the blue line refers to Germany inflation rate. 3.8% is actually very high for Germany. Okay, similarly for the entire euro area is up 2.2%. Okay, so we can see that the gradients and the trajectory seems to be pointing to a much higher inflation rate going forward. Remember, we are now in the middle of summer, and we should see more economic activity. So with more economic activity and the fact that the supply line has been very badly affected, coupled with higher commodity prices, input cost has gone up. So you can see the PPI has also gone up. So you can see that overall the inflation situation is not is going to be elevated for some time. Okay, and for both Germany and the euro area, the biggest cause of inflation is the import of energy. To run the economy, the entire euro area has to import energy from either the Middle East, or right now Germany already have a pipeline from Russia. Okay, so that one will come on stream very soon. So hopefully by the time that the Russian natural gas pipeline is operational, hopefully the price of energy can come down. But it's going to also affect the rest of the euro area, because the pipeline only ends in Germany. It doesn't go to everywhere else. The other highlight we want to know is, of course, going into next month. Next month will be the German election. The two front runner, one is Armin Laschet, which is the candidate for the Christian Democrat Union. Okay, the Christian Democratic Union. He is currently leading in the poll. However, remember last month there was a severe flood in Western Europe, and Germany has been very badly affected. There are still hundreds of people still missing and unaccounted for. And as a result of this, the front runner has saw his popularity actually dip a little bit. Going into last month, his popularity was, or rather his approval rate was at 28%. He has recently dropped to 26. The other front runner is from the Green Party. Okay, Annalena Baerbock, is going to be the, I think these two candidates is going to form a coalition. So this is what the market expect. The two parties is going to come together and they're going to win the next coming election, which is scheduled for September 26th next month. Okay. However, if there are changes to this mix, then obviously the stock market is going to react. Right now, the market has already priced in a coalition led by the CDU as well as the Green Party. Okay, so however, if the result is very different from what the market expect, of course, we can see some volatility going into the September month. Okay, and by the time September, the result is out, we are already at the doorstep of October. Again, October to me has always been a month in which every people who are in equity space want to watch out. Okay, the following will be my outlook for these two products, the DAX 30 as well as the EURO STOXX 50. Again, these are my opinion. Got nothing to do with me giving you a recommendation. These are purely what I see for my own analysis. In this particular chart here is the DAX, because the micro DAX contract only started in the middle of April. So there's not enough historical data for me to give you a longer term outlook. So I fall back on the regular contract. Okay, you can see that I base this on the regular September contract, the FDAX. Okay, this is the regular DAX contract, the large contract, the regular one. Okay, so because it has a longer history and it allows me to do a much more meaningful longer term analysis. This is the weekly time frame. The last price is at 15,750, which was the closing price for yesterday. Yesterday being the first day of the week. So to date, it's only less than 8 months into the year. The DAX itself has already gone up by 2,000 points, which is fantastic. Okay, and that's one of the reasons why I say the micro equity index, the launch for the DAX as well as the EURO STOXX is very timely, because the market right now is in that very bullish phase. In percentage term, the DAX itself has already gone up by more than 14.6%, almost 14.6%. Today is a little bit muted. At the last time when I saw this chart was actually updated this morning at 10 o'clock. Okay, so after 10 o'clock, I do not know, because I have not been watching this market. So you can see that in this particular chart here, you can see that there are a couple of green color box. The way I look at market, I like to make it easier for me, because I'm quite a visual person. So I need to see the underlying trend. By looking at this chart with the green boxes, immediately it tells me that the market has a very bullish underlying trend. Okay, so the underlying trend in the weekly time frame is very bullish. However, you can see that there's a pink color box right at the very top. The high traded was at 15,806, and that was traded 2 months ago. Okay, 15,806 was the highest I ever traded. The current price is at 15,750. So we are slightly off the high. Okay? Based on this, I know if the market continue to go beyond 15,806, there is a potential for the market to go all the way to 18,134. However, these are not hard target. These are projected target. The idea of having a projected target to me is very simple. You give me a price to aim for, so that when I decide to buy, I want to know what are the potential relative to if I take a position right now, I'm not knowing what is the potential to aim for. Then it's very difficult for me to measure the risk-reward ratio. Okay, so based on this, I do see that the market is very bullish. There's a counter trend in place, and the counter trend started at 15,806. This is based on the regular September contract. Okay, so you can see on the left there, I have a very simple summary. I have a dominant trend is up. Long-term target is 18,134. Okay, and then at what point would I believe that this bullish outlook is over? If the price goes below 11,313. So this is very far away from where the market is right now. So based on the weekly time frame, unless that happens, I will maintain a bullish outlook. Is there a counter trend? Yes, there's a counter trend, and the target is at 15,305. If I want to sell now, can I sell? I can sell. I can at most aim for 15,300, and my stop loss has to be just above the all-time high at 15,807, just one tick above. Okay, that will be enough for me to take up this position. So based on where the price is right now at 15,750 relative to my stop loss order, and then again you compare that to the potential counter trend target at 14,000. At 14,918. However, I'm only aiming for the most recent low. The most recent low is at 15,032. That will be enough for me to realize profit. So you can see that the target I'm looking for is not for the market to go all the way to below 15,000. If I'm going to do a trade, I know that I have a potential to make up for the market to go down to test 15,000. Okay, so this is the weekly time frame. On the daily time frame, you should be able to see the same thing just on a magnified version. Obviously, right now we're going to zoom in on the pink color box. The underlying trend is obviously very bullish. Okay, again, you can see on the daily time frame, the target is a bit different. The upside target here, based on the daily time frame, is at 17,825. So that will be my target. That if I'm going to buy, that will be all that I can aim for. Okay. Likewise, if right now I want to sell based on the last trading price like yesterday at 15,750, then I know if I sell down, the market right now is within a band of prices, which is very ideal for me to sell. I will only want to sell if I see confirmation, let's say from the 4 hours or the 1 hour time frame in which I have a reversal signal on the, let's say, a candle bar. Okay. Now, if you have been trading for some time, you understand that you can look for reversal signal. And where it appears is very important. If I get a reversal signal right now within the daily time frame at 17,743 to 15,806, that band of prices is actually my sell zone. Okay, and you can see it in this chart here. The area is in a slightly darker pink color. Okay, so that ideal zone is where the market is right now. Right? As of 10 o'clock this morning, the price is already within this zone. So all I need now is the last part, which is the confirmation of a reversal in the lower time frame. Okay, so if I take this trade, I can aim for a potential target of 15,300. I'm not even going down all the way to 15,000. So you can see the risk reward, it actually is quite good because my stop loss is just above 15,806. Okay, just above it. Now I'm going to share with you another time frame, which is the hourly time frame. Now this hourly time frame is definitely for those who do intra trade. So once you have an idea of where the market is heading, obviously then you've got to crystallize as to what you want to do. Do you want to engage the market, or do you want to stand aside? So based on what I've seen so far, there is a very good chance that I can do something about it. Because the current market seems to be very buoyant, there's a very good chance that the prices may continue to move a bit higher. And if the price goes to within the zone of 15,779, you can see below that there's a probable trade setup. That is a price I want to sell. Okay, on the condition once the price goes into 15,779, I get a reversal signal in the candle bar. Once I get a confirmation on the candle bar, I will pull the trigger and sell short this particular index. Okay, and my stop loss is again just above the most recent high at 15,789, not even a 15,806. Okay, so it has a lower band because prior to that the market actually moved down and allows me to fine-tune my entry and exit. Now my target is at 15,686, which is considerably higher than where the daily and the weekly time frame suggests that market can come down to. Okay, so if this trade worked out, I have a risk reward ratio of 1:9. Now 1:9 is a fantastic ratio, meaning to say for every €1 that I'm prepared to risk, I have a potential of making €9. So this is a fantastic ratio. For day traders, sometimes you don't even have such superior risk reward ratio. There are a lot of people who day trades and they go in for a 1:1. there's nothing wrong with that, so long as you know what you are doing. Okay, so in this case, if this trade do work out, this is the trade plan basically. Okay, again, I will have to see when the price goes to 15,779 how the market reacts. Now on the DAX 50 is so strong that it's no counter trend. This market has been so firm. Earlier on, I did show you the GDP growth, right? The GDP growth was a blowout GDP numbers, okay, compared to the Germany GDP. So you can see that the EURO STOXX 50 is comparatively speaking a lot firmer compared to the DAX 30. So based on this, the market right now is inching towards its target in the weekly time frame at 4,237, and this is very, very close because the last traded price yesterday was 4,176. Year to date is up almost 17.7%, which is very good compared to the DAX 30. Okay, by any number, even the DAX 30 is considered a very good number in terms of performance for the year. And we are only in August. We still have another quarter to go before the end of the year. So we want to see how this thing play out. Like I say, a lot of things can go wrong. Earlier on, I did mention the Delta variant. If it becomes an issue whereby more people are getting infected and they have to consider locking down again, that will be a negative, and price of equity will actually reflect this change in sentiment. The other thing that we also want to concern with will be the inflation outlook. If the inflation rate continue to spike at the current rate, then I think at some point the central bank cannot wait. They will probably have to do something about it. How they do something about it? There are only two tools that they can do right now. Either they hike the rates, which is a no-no, because whether it is Eurozone or whether it is US, both economies are such heavily in debt that an increase in interest rate is going to increase the burden of servicing that debt. Okay, so a hike in interest rate is not something they want to do. So they're trying to convince the market that this inflation that we are seeing right now is temporary. However, we all can look at the numbers. We have to make our own conclusion. They may say it's temporary, but you have to draw your own conclusion. The numbers will not lie to you. Okay, so if this inflation gets out of hand, sooner or later it will tip their hand. They will have to do something. The other thing that they can do, of course, is to taper. Both the United States and Eurozone has been doing QE for years, since the start of the 2009 global financial crisis. So right now they are addicted, okay, to debts, and they cannot stop. So the QE cannot taper because they need to continue to borrow, okay, in order to function. At some point, this borrowing will come, the day of reckoning will come. So when the day of reckoning comes, obviously, you're going to see a very significant pullback, okay? I'm not talking about a crash in market whereby we go into a bear market. I do not honestly believe that we will enter a bear market for years to come. However, a severe pullback is not within. Sorry, it is definitely a possibility. That's what I'm trying to say. Okay, so based on this Eurodex, Euro STOXX 50, the weekly time frame has no counter trend, so there is nothing to look to sell. Right now on the weekly time frame, there is no sell scenario at all. Okay, now when we look at the daily time frame, again, this is based on the regular Euro STOXX 50. The reason why I do this is because the micro Euro STOXX only started in April 19, so there's not enough historical value for me to do a long-term projection. So you can see that the last price is at today is at 4,184. It's already higher than yesterday's closing price. So this market continues to be elevated. Going forward, there is nothing I can do here because the market at this price I'm not prepared to buy. Okay, definitely I won't be selling because there is no sell signal whatsoever. Even at the lower time frame, there is a counter trend. However, you want to look at this from all the regular contract. When you want to decide to do anything on the micro, whether it is Euro STOXX or whether it's the DAX, make sure you refer to the regular contract. Do you see the same thing? If you see a sell signal on the micro but not in the regular or even the mini contract, then that signal is not verified. So you got to be very cautious when you just only look at one product. You got to look at the range of product. You may even have to look at the cash index to get some kind of confirmation. Ideally, you should be able to see the same thing across the regular contract, the mini contract, as well as the cash index. When you see everything's are in place and you see the a signal in the micro contract, then I think it's a lot safer to pull the trigger. So based on this current movement itself, the price right now is in that range of prices at 4,179 to 4,181. The area is actually quite ideal to take up a sell position. Again, this chart was updated at 10 this morning, so there was already 5-6 hours in between which I have not monitored. Price would have gone into that box of 4,179 to 4,181, or it could have missed it. Okay, again, we have to watch it on a real-time basis. So if this trade work out, I'm looking to take profit at the 4,155. Okay, and this risk reward ratio is even better than the one in DAX 30. Okay, it's almost 1:10, almost 10. Okay, so again, it's a very superior kind of risk reward ratio. Always look out for risk reward ratio that are superior, because then you can afford not to make money in every single trade and still come out smelling like a rose. A lot of people say that, do you have very high win rate? Again, win rate depends on what kind of trader you are and what kind of strategy you use. Okay, to me, win rate doesn't mean anything. Okay, for a day trader, yes. For a day trader, the win rate is very important. For person like me who you do a lot of swing trade, then obviously the risk reward ratio is of higher importance. Now, if you want to find out more about the micro index futures in Urex, especially the EURO STOXX and the DAX 30, there's a ton of resources within the Urex website, which you can actually tap on. Okay, you can see the tab on top. You have Urex, you have market, you have trade, you have data. So all these are information that you can actually access. Okay, and there are also a couple of videos explaining certain strategies. For example, so if you have the time and you want to know more about this product, you can actually visit their website. Their website is called www.urex.com/micro. This is of course referring to the micro equity index. So we have come to the time whereby you can post question to me. Okay, so do post me the question if you have any.
Okay, thank you, Daniel. We're moving on to the Q&A segment now. So everyone, do take this chance to ask Daniel any questions you may have. And Daniel, we actually have one question asking about where one can learn how to trade stock indices. And I believe you have a workshop coming up. Would you like to share some details about it? And if there are any other resources you recommend, we are happy to hear.
Actually, I do conduct a few stuff every week. Obviously, the important one, there will be, because I believe right now the market is going into that twilight zone I mentioned earlier, between August, October. I think something major is going to happen. Okay, what I do not know, but I do want to prepare my followers for this very high volatility period. Okay, between August to October. And you can follow me on my Facebook. For example, you can see here, you can follow me at Daniel at Traders Academy, or you can follow me at Facebook /Daniel Ang Traders. Okay, this is where you can actually follow me on Facebook. This workshop is what I'm talking about. I'm going to spend one entire day from morning 10 a.m. to 5 p.m. in which I'm going to conduct a workshop in which I'll be showing a 4-step framework in which I will be able to teach you or show you how I approach any markets. The system that I'm using is not rocket science. It's actually a lot of common sense. It essentially will attempt to answer 4 basic questions. What should I be doing? Should I be buying or should I be selling? A lot of times, a lot of people go into the market without even answering this part of the question, because if you do not know the market is up or down, then you cannot decide whether to buy or sell. So the first thing I will want to tackle is that find out what is the dominant trend. And the dominant trend can only be found in a higher time frame. However, we don't trade a higher time frame. We use a lower time frame for to fine-tune our entries. But the directional bias is very important. Once you know the directional bias, let's say for example, equity index is going up, then obviously you should be buying, right? But you can't buy at any price. There are certain prices that you cannot buy, and certain prices are much better for you to buy. Okay, so that will be one part of the framework. The second one is after you decide the market is going to go up, you have to decide where do I enter a trade. The entry is going to be the bulk of this strategy. Okay, because if you enter at the wrong place, Then if the market doesn't go up immediately, then you will have to go through the emotional roller coaster. Okay, you'll be doubting whether you have done correctly, whether you should be buying or whether you should be cutting loss. So there's a lot of things that goes on after you enter a trade. So the entry is of utmost important. So the second part of this framework will be, what are the ideal level to get in and how you decide when to get in. Okay, obviously that will be covered. And then of course the third part of the framework is, what if you are wrong? A lot of time, a lot of people goes into a market without having this worst case scenario. And then if the market goes against them, then they will be thinking, should I cut loss now or should I wait? You know, so there will be a lot of things going through their mind, and that is not healthy because the emotional swing is going to be very, very damaging. So you got to determine where is that cut loss point. And the cut loss point is so clear, there is no other place I will put a stop loss. It has to be that place. Okay, within this framework, I will show you exactly where that place is. Of course, the last part will be where to take profit. Just because the position is in your favor doesn't mean that you are making money. That money is not yours until you take it, right? So again, we will have to have a very hard profit-taking levels. Okay, market can go beyond the price in which you are taking profit. That doesn't matter because you already achieve your objective. So if you can answer these 4 basic questions, you already have a system which you can use across all markets, across all time frame. So this is what I'll be sharing this coming Saturday. There's still time to register. If you are keen, just scan this QR code and you should be able to go to a registration page and you can just register. Okay. Likewise, you can also visit my website. This is a book that I had written last year because suddenly we are all locked down at home and all work from home. So I decided to get started on a project that I have always wanted to do, which is to write a book. So this is the first book. It's already available at Kinokuniya in both Malaysia and Singapore. You can actually go online and buy it. Okay, it's inexpensive. Okay, so if you have questions that you want to ask me directly, you can write to support@tradersacademyonline.com. So I will be able to answer you there. If you want to, every Sunday, I also have a free to attend webinar in which I will attempt to cover what happened in the week prior. Okay, let me just say the entire week, what happens and what are my outlook for the markets going forward. So I cover quite a wide range of product. I cover the stock index for sure. Okay, not only the US equity index, I also cover the European. I cover maybe the Malaysia and Singapore as well. I don't cover equities per se. I only cover the stock index. Then I'll cover the precious metals. I cover currencies and cryptocurrencies. And of course, this week we already know at the start of the week we already saw a near meltdown in precious metals, right? So I will definitely be talking about that. I will also talk about energy as well because energy also follows gold on the way down. So this coming weekend, I'll be talking specifically on precious metals and energy. Whatever is the flavor of the week, people will be anxious to know what is happening and what can they expect. So in this webinar, every Sunday, if there's nothing that holds me back, it will be at 8 p.m. Singapore time. And you can again register, watch out for my notification on Facebook.
All right, thank you for that, Daniel. We don't have any other questions from the audience tonight, so we shall conclude the session here. Yep, so thank you, Daniel, as well as Ken, and thank you very much, everybody, for your time tuning into this webinar tonight. We will be sending everyone a link to today's webinar recording, so you can watch it again if you'd like to. Also, all Phillip Futures clients can trade the micro DEX as well as the micro EURO STOXX 50 futures at only 150 euros. Do visit our website at phillipfutures.com.sg for more information. And that's all for today. Thank you, everyone, and goodbye.
Thank you. Bye.